Okay, folks, welcome to Market Wrap for the 9th. We saw a strange market today in that correlations, meaning weak yields, resulted in a stronger dollar. The dollar actually sold off very, very early on this morning and then rallied back to close pretty strong on the day. So that's a bit of a divergence. I think that what we're looking at right now is a market that is absorbing the Chinese PMI data, the inflation data, and let me correct that, not PMI, PPI. I'm thinking about a mortgage. PPI, Producer Price Index out of China, which came in very, very hot. They're talking about price controls over there. Always a horrible idea. But for a Marxist society, that's what they like to do. We've tried it here, failure. So I don't expect it's going to work. All it results in is scarcity. And I want to do a little bit of a deep dive onto the strategy with regard to precious metals, why we're holding in there, what do I think is going to happen, because frankly, I see tomorrow as being a net positive, if not tomorrow, by Friday, just in case there's a lag, and I'll go into that in a moment. But let's begin with the bond market. TLT shot up higher today. Should have been great for tech. It was early on, but the outcome was not wonderful. So we have a doji star formation. We faded a bit, still net. Strong price action here on the TLT, no doubt about it. Now, the yield broke support today. Remember last night, I was talking about Stokes being oversold. We held support. This has been strong support for a couple of months now, few months, ever since February. And yet we managed to break support. And unlike this day here back on May the 7th, we did not rally back. We closed down below critical support. Will it hold? I doubt it. I tend to doubt it. Stokes are even more oversold than they were yesterday. Moving on to the tip market, a fade on the day, no breakout. But we did, on an intraday basis, we put in a new all-time high. But to me, it doesn't matter where we trade intraday. What matters is where we close. And you could see that we did rally up and through 127.60. But the fact that we put in a new all-time high today is telling me that, yeah, there is a serious fear about inflation. So if you think about gold and how it performed today, what influenced gold today? It wasn't the decline in yields. It was the rise in the dollar. Even though we saw indications that people are afraid, investors are afraid, and they bought tips. Volume was above average. This is not mom and pop buying a single tip. This is institutional money flows. Now, as for the dollar, a good day today. This is an outside reversal bar and a bullish key reversal at that. Very strong price action here on the indicators. Volume was okay. It rose versus yesterday, but still below average. So looking at this chart, to me, it's got to go up higher because, man, I'll tell you, if we don't follow through on this price action here after this bullish reversal bar, especially with yields dropping, there's something wrong. You would have thought with yields dropping, the dollar would have taken it on the chin. It didn't. It rallied. So I think what's happening here is that it's typical. Traders are front-running CPI. Traders are front-running CPI. What have they been doing? On a hot number, meaning rising inflation, they are buying dollars, selling gold. I think they front-ran that trade today on the anticipation of a hot number. Now, what if, though, let's go just jumping straight to gold. What if, though, let's go back to, I think it was May the 12th, the last CPI report came out. That was here. And you can see on that day, the prior day, we had a very bullish day. On that day, hammered. But then the following day, traders woke up and they said, wait a minute, what's going on here? We ought to be buying gold. So what I think is happening is that this price action today is what we saw, very similar to what we saw back on the 12th. In that they're anticipating a hot number. So they're front running it. They sold gold, bought the dollar. But I think what's going to happen is even if the CPI data doesn't come out hot tomorrow and comes in as expected, or if it does come out hot, those who have wanted to buy dollars may have already bought. I'm going to use the word may. And those who want to sell gold may have already sold gold. And if we get a hot number, finally, we may have traders that are saying, okay, knee-jerk reaction ought to be to the upside rather than selling gold and buying the dollar. Let's learn from history that we ought to be buying gold, selling dollars. Tomorrow's critical, folks. Take note of Stokes here, possible double bottom setup. Let's annotate that, memorialize it, and we're good to go. So those are the thoughts on tomorrow's CPI data, today's price action of bonds, yields, gold, the dollar. That's where my head's at, if you're wondering. To the VIX. Strong price action today. It was a very, very strong close. So this leads me to believe that should we get a hot number tomorrow, that we are going to get a sell-off on at least the S&P 500. I would imagine tech, perhaps not energy. But I'll tell you, the transports today, nobody was front-running this. Remember last night I was talking about price action and how you should expect after an orderly pullback like this and then a bullish key reversal off of historical support that you ought to get a follow-through. And we got that follow-through, only it was rejected. They hammered the transports today and it broke down. Volume was light. Stokes are very, very weak now. We now have lower lows on the Stokes. The S&P 500. The topping action continues here. We've been talking about this for a while now, ever since really, you can go all the way back to, if you want, mid-April. And all you get are fits and starts, filled candlesticks, doji star formations, failed breakouts. Look at this bullish key reversal bar on June the 4th. No follow-through whatsoever. Volume, both to the up and down side, is abysmal. And I think that this speaks volumes about what we're seeing on the candlestick action. People don't know what to do next. There is a tug of war going on out there between bulls and bears. The Dow Jones took it on the chin today. RSI, lower highs. Stokes, lower highs. New daily low. Volume declined. So this was not a clear distribution day. The Qs eked out a gain. Why? Declining yields. Now, if they faded on the day on declining yields, what's going to happen if tomorrow we see a surge in yields? It's not going to bode well for the Qs. Let's check out the semis. No new daily low, but another down day, nearly a third of a percentage point. Let's check out Mr. Softy. We discussed this one last night. It had a bearish reversal bar yesterday, rallied today, no new daily high, faded off the highs of the day, closed positive by nearly a half percentage point, but this is bearish price action. Two ways about it. IWM, daily chart, down over a half percentage point. This is not a broken chart. We're not going to talk our book here. Do I hope that it breaks support and fails and collapses back down to this trading range? Absolutely. But all we might get here is a retest of the breakout point. We want to go into tomorrow with eyes wide open, anticipate the worst, yet hope for the best. The banks, weak yields, weak banks, down nearly a percentage point, volume light. Technology, daily chart, it's very similar to the Qs here in terms of price action, nothing new. Volume rose, but still very, very light. Consumer discretionaries, outside reversal bar. We spoke about this one last night. I did not expect an aggressive move up higher from here. And today, nearly an outside reversal bar. Not quite. We did not take out yesterday's lows. Volume rose, but still below average. Energy. Great price action yesterday. Horrible price action today. Why? You guessed it. Weak yields. When yields pull back, it's psychologically damaging to those who are long or bullish on the cyclicals because it implies that the economy is weak. And that's why they're selling the transports. That's why they're selling energy. Now, what if we get hot inflation, rising yields, and the reality is that the economy, GDP, does not grow as strong as what they're expecting. And that's what I believe is going to happen. That is stagflation. Stagnant growth with inflation. Emerging markets pulled back today on a strong US dollar. Brazil, another one, pulled back today. It's extended anyway. We went over gold. GDXJ, nearing that oversold mark, but a bearish reversal bar. We took out yesterday's lows. We're probably going to go lower here. Volume dropped off sequentially. Love to see that. NUGT down 1/3 of a percentage point. Technically, we broke support here. Volume dropped off. Good to see. Silver, an up day, nearly 1.5%. We faded on the day. Looking good. Great volume. Wonderful volume. Stokes defending 50. Good to see. SILJ. Bit of a reversal here. Stokes is still weak. No great shock. Volume rose. But a lot of that was selling. So let's keep that in mind. Gold money. Back above support. Good to see. What's with the good to see tonight? That was not planned. Cal-Maine Foods. Pre-drag was on the live stream earlier. He pointed out that Cal-Maine was rallying. By the time we got to the chart, it had faded. And I was toying with buying more, but I held off because 37 is resistance. I just couldn't do it. I didn't want to make a mistake. I bought more back here. We ultimately had to stop out. I did not want to repeat that mistake. So we live, we learn. Boyle, well, we're out of this. So I did not act today. I should have acted, I guess. Volume dropped off dramatically. So perhaps we'll get another pullback here, another bite at the apple. Shake Shack. One of the reasons why I've held on to Shake Shack into the call strike area, because our strike price on the call side was $100 per share. And it doesn't make me feel comfortable. And that's why we moved up our put side to help defend by adding a credit. And the reason why I held so steadfast is that the 50-period moving average is declining and right above the $100 mark. That doesn't mean we're not going to break out above 50, but usually when stocks rally up and into the 50-day moving average, usually they pull back and they consolidate, and then they take another run at the 50-day moving average. Sometimes they fail, many times they succeed, but all we're dealing with right here, right now, is time decay, theta, time decay. Expiration is 625. With every passing minute that we're not trading above 100 and we're above 93.50, we're banking. And the premiums on these deflated dramatically today. They're still very expensive, but they decreased dramatically, especially when we dropped back to under $100 per share. All the enthusiasm came out, not all, most enthusiasm came out of the options market. Because remember what drives implied volatility in the price of an option? It's the demand, it's supply demand for that option, not necessarily the VIX. So I'm hoping we retrace back down to 95, thereabouts. Next week, if we do that, we should be in a profit zone by that point in time. We'll book our profits and move to the sidelines. We're way too close to a strike price for me to wait for 50% profit. And the rule is that I'm trying to use as much as possible. Once we get over 50% and or within 21 days of expiration, if we're too close to the strike price, we're going to look to close out that position, book our profits, look for prey elsewhere with less risk and more reward. Now, Coinbase had a nice rebound today. We did fade off the highs. Remember that yesterday we opened up a strangle. I'll bring it up just in case you folks did not see last night's market wrap. Our call side is at $300 per share. Our put side is at $160 per share. So we have nearly an 80% probability of profit. I'll take that. We're not going to be waiting until July the 23rd to make profits real. We sold the options when they were expensive. All we're looking for is IV crush, meaning the overpricing of the option comes back down, reverts to the mean. And as time decay evaporates and you have the price of the options come back down to where they should be, well, then there's where your profit margin is. That's where your profits are. We want to take them early so that we don't get challenged up at the 300 strike or the 160 strike. We avoid all that. And I'm probably going to be adding a longer position on Coinbase, meaning the common. I like this setup here. It's very beaten up. Kathy Wood liked it all the way back here. Now look at this setup. She liked it up in the mid to low threes. I'll give her the benefit of the doubt. She didn't buy at the highs. But here we are down at the low twos. So if she loved it back here, she's got to be completely enamored down here. So with that, folks, I will talk to you tomorrow. Everybody have a great night and be well.